Welcome to the Dental School Guide podcast, your ultimate destination for all things dentistry. I'm Dr. Tanner Townsend, your guide through the complex world of dental education. Join us as we uncover the secrets of acing dental school admissions, navigating residency programs, and exploring career opportunities. Please share and enjoy. Real quick, just wanted to make all you pre-dental students out there aware of a resource. If you've ever been worried about getting into dental school or are wanting to get into that school of your dreams, then you definitely want to check out a program called Dental School Guide. In the program, we walk you through how to save money, time, and heartache when applying to dental school. There's so much fluff out there when it comes to resources for getting into school, and we are streamlining all of that. With our comprehensive digital course, expert mentorship, and personalized application review services, you'll have everything you need to stand out to admission committees. Take advantage of this amazing resource that will help you increase your chances of getting into dental school. You'll want to check out dentalschoolguide.com. Check it out. Welcome back to the Dental School Guide podcast. I'm your host, Dr. Tanner Townsend, and I am here with Lauryn with Student Loan Planners today. Is that correct?
Yes, student loan planner. My name is Lauryn Williams. Thanks for having me on the show, Tanner.
We are super excited to have you here, Lauryn. And so tell us first and foremost a little bit about what you do with student loan planners and kind of what you guys do on a daily basis.
Absolutely. So I joined the student loan planner team in 2018. So I'm one of the OG consultants. And when I say consultants, what we do at student loan planner is build plans for the person that wants to figure out, like, what is my specific student loan story? What is the best route to repayment for me, as opposed to just like getting a blanket plan based on, blanket information. There are 8 billion people in the world. We're all different. Your student loan plan is the same. So you don't want to do what your friend does, because that could lead to you not doing the most efficient thing. So we do 60-minute consultations to help people better understand what is best based on their particular student loan situation.
I love it. So I think there's a lot of, when you talk to a general advisor or a general, person that is familiar with dental school loans, or even like the advisors in the school, they're like, yep, it's just federal and private loans. That's it, and they don't really get into the nitty gritty behind, which plan you pick within the federal loans. And I know those are changed recently with the big, beautiful bill, but first and foremost, just to lay a groundwork for those that don't understand the difference, what is the difference between the federal and the private student loans for dental school, for example?
Absolutely. So federal student loans are provided via the federal government, and there are a lot of different ways to repay your loans within the federal system. However, on the other end, the private debt would be a private company. So there's tons of them: SoFi, Earnest, Common Bond, Laurel Road, you name it. You probably get junk mail from them as soon as you sign up to be a student for anything. It's like they find you.
I have no idea how they get that. It's crazy how that information just gets out. Like they must have some crazy access or paying crazy money to get some of our info. It's nuts.
Yeah, the data sharing is unbelievable nowadays. But with the private debt, it's with a private company. So those companies are not scams, or, feels a little bit weird sometimes, especially when they're reaching out to you. But what happens with a private company is that your only option is to pay the debt back. You don't have any fancy pants payment plans like you do in the federal system. So as an example, in the federal system, there's a few different options where you can pay based on your income. So you have low income, you have a low payment; higher income, higher payment. With a private loan, it's just, here's your payment, just like a car or a house. Pay the same amount every month. At the end of whatever term you agreed to, the loans are paid off in full. The benefit to the private system is that you actually usually get a lower interest rate than you would in the federal system. So you can't negotiate your interest rate within the federal system. And if you're going to pay your loans back in full, then it usually makes more sense to do so using one of these private lenders to get the best interest rate, so that you can save yourself that little bit of money versus staying federal the whole time and, maybe paying a much higher interest rate if you're not going to use one of the forgiveness plans that's available.
That's wonderful. So obviously there's a lot of different commotion going on right now in the student loan space because of this new big, beautiful bill that was just passed. There's a lot of different moving parts to it, and a lot of it's kind of unknown. But let's kind of jump into it. We know the difference between federal and private loans. Most of the time, the students that we work with are probably in that federal loan category to start school, and then they may transition on once they've graduated to refinance or whatever, and we'll get to that later on. But what are some of the big things that students really should be looking at with that big, beautiful bill of how it's going to really affect them in the coming years in terms of borrowing and limits and so on?
Exactly. That is the thing that is most important for dental school students right now is that there will be limits going forward. So, if you're listening to this podcast and you've already started, great news. You will be grandfathered into the limits that were, previously available to you. So it's not going to change the way that you can borrow, but it will change what is available to you as far as repayment after a certain time frame. So let's just use an example. You've borrowed already for 2024, 2025. You've got those federal loans, but you still need to borrow again in 2026 and maybe even 2027. After July of 2026, they're imposing some changes to the payment plans that are going to be available. So some of your loans will be able to do one thing, and the rest of your loans will be able to do something different. So now repayment is what you need to pay closer attention to. And when I say that, there's a thing called the RAP plan that we'll talk about, in a few minutes. And that's what you're going to be looking at as a repayment option. On the other hand, if you've borrowed and you're like, okay, well, I'm at least going to be able to take out the same amount that I need, right? And it's like, yes, if you have started borrowing, you will be able to continue borrowing for dental school at the way that you were. But I think what's going to happen coming down the pipeline is that they're going to have to change the cost of dental school going forward, or we're going to see a lot less people enrolling, because if you are a new borrower, as of 2026, like you said, there are some limits in place that we need to take into account.
So here's one of because I've contemplated this as well, Lauryn, like how the heck are they going to do this? Because like those caps, that 257,000 cap that they're going to put on new borrowers, are schools like, are you hearing in your guys' end like schools are willing to take a massive pay cut on this? Because I just don't see that happening, and I'm just wondering, like, what are they going to do? Or students, like, are we going to see a massive decrease, like you kind of alluded to, of students applying? Or is it just going to be high-income families that are going to be shelling out the money to get their kid into school? I don't know. Are you guys seeing any trends on that front? I know it's still, like, we're a month into this now, and it's still very new, but have you heard anything on that front?
I think that the schools will fight back. So initially, it's going to be exactly what you described. Enrollment's going to go down, and only people that can afford to go to school, pay out of pocket, or have some sort of repayment option available to them, are going to be enrolling in the education. I think you will also see initially some people that just don't know better that will take out private loans. But it's going to be a lot harder for companies to allow people to take on private debt because it's unsecured debt. So it's a lot more risky. And what does it come with? Much higher interest rates. So we're putting people in really tough financial situations if they're borrowing $300,000-$400,000, which is the case for most dental students, in a private manner at an interest rate that may be 13-14%. It feels like a credit card.
Yeah.
Most people will say, oh, that's beyond what I'm able to do. I'm just not going to dental school. There will be a small group of people that will just take on the debt and say, I'll figure it out later. But I think overwhelmingly, it's what you said, that we'll see the haves be able to continue to applying for dental school, and the have-nots will start to fall off. What I hope is going to happen is that they adjust the cost of getting this education. We all just experienced COVID. We all went online. We know that, you don't have to be in a building and have, all the overhead that a school has had up to this point. Dental school, you probably need to be in person a little bit. I don't want anybody working on my teeth that's never touched a tooth before.
But like a lot of the didactic stuff, I mean, like, yeah, there's hands-on stuff that you do throughout, but like they could definitely cut down on the number of, in terms of infrastructure, staff, all that, cut back, move all the classwork online, and then do the hands-on stuff. But yeah, no, and that's just one of the things that I've been really thinking about is like, I I wish these schools would be willing to cut back. So you view them pushing back on the government saying, "Hey, we want like an exception for dental or exception for medical." Is that what you're thinking is going to potentially happen?
Yeah, or even just like they lobbying the important people behind the scenes who, benefit from this. Unfortunately, like our system has been very broken for a really long
Yeah.
time, and we do need to revamp it. And education should be more affordable for everybody. And I think this bill could result in that over the long term, but in the short
It
term,
hurts in the short term.
it's going to be, yeah, it's going to hurt, and people are going to push back, and then they're going to have to change these limits to something that will allow schools to continue to earn a living and also allow other people to be able to go and get their education. So
Yeah,
I mean, all remains to be seen. It's speculation at this point, but yeah, something's got to give.
yeah, I'm all for having the schools. I saw through my dental school fees increase 5 to 7% every year. And it's like, this has got to be capped at some point.
Exactly. It's more than inflation,
It's more than inflation. I know they say they're keeping up with inflation, but I think that's a bunch of garbage. Like, I don't get to raise my fees that high every year in practice. You know what I mean?
Exactly.
So, I mean, where's the end? I don't know. Some of the things that I like to gripe about on my end.
No, it's really tough for dentists. A lot of people just look at them and say like, "Oh, all dentists are rich," and same thing with like a lot of physicians. They put you all in a category that's just like top notch. I don't have any pity for you, but not all dentists are earning buku bucks.
Yeah,
We
and
talk to
like,
people frequently that earn like 200K with 600,000 of student loan debt.
yeah,
Um,
and when your student
a
loan
house that you can't live in.
no, and like when your student loan payment is $5,000 a month on that standard plan, it's like
Hmm.
that's a lot of money, and that's after
Exactly.
your paycheck or whatever you set aside for taxes. Like, that's a big portion of your income. So
Yeah.
I don't know.
So yeah, let's talk about that actually. To your point, what's going to be left over? So there's going to be the standard repayment
Yeah,
plan, the graduated repayment plan, the extended repayment plan, which all have existed, for eternity, if you will, and have never been really good ways to pay back your loans. The standard has not been good because, like I said, the federal interest rates have never really been better than private interest rates. So if you could afford to pay the standard, you generally would have refinanced your loans and gotten a private loan for the same term at a better interest rate. The graduated and the extended are both longer repayment terms, so they give you a smaller payment on the front end. But what happens when you have a smaller payment and then you're going to end up paying the loans in full? You just pay a lot more interest over time. So they stretch it out over 20 or 30 years, 25 years, depending on which plan you choose. And you end up paying so much more in interest. It could be like an extra $100,000 on your loan just so you could have an affordable monthly payment. And that's really frustrating for people. So what's going to be left is the IBR plan and then the RAP plan. So IBR is going to be income-based repayment, and then there's also the RAP, which is, like I said, the only thing you'll be able to do if you borrow after July of 2026. And we should talk about probably how that one works
Yeah.
and from an income standpoint as well.
Yeah. So correct me if I'm wrong here. The RAP is kind of replacing the save and the repay programs, but it's less borrower friendly. I mean, you're gonna correct me, I hope, if I'm wrong on any of this, because I'm not an expert in this. But it seems like it's more similar to the save program, if I'm correct, in like it's still kind of income based, at least initially. Correct me if I'm wrong. Go for it. I'll stop talking.
Yeah, so it is an income-driven repayment plan. You've got that part right. The thing that's drastically different about it is that they take 10% of your adjusted gross income once you're over $100,000 of income. So there's some other numbers. It's like if you make between 10,000 and 20,000, they take 1% of your adjusted gross income. If you're between 20 and 30, but for dentists, we know that you all will earn in the six-figure range. So let's just give an example. You get it right out of school and you start at $120,000 of adjusted gross income. 10% of that number, because everything that's over 100 is going to be 10%. Whether you make 500,000, 10% of your AGI. 100,000, 10%. So in my example, you make $120,000. 10% of that, of course, is $12,000. Divided by 12 months, your payment is going to be $1,000 a month. So are you able at $120,000 of income to make a student loan payment of $1,000 a month? Some people would say yes. Some people would say no. The other thing they don't think about is like what state you live in. It's going to be a lot harder if you're living in New York City or California
Yeah.
to make $1,000 payment than if you're living in Iowa. And like I said, even at this stage of the game, if you're, $100,000, $120,000, what you're actually bringing home and end up with a $1,000 a month payment, it's going to be pretty hard for a lot of people to make. So that's drastically different than the way that they were calculating the payment before. It was based on adjusted gross income. However, they took 150% of the poverty line out first before they did the
Mm.
calculation. And then they also changed the poverty line number based on your family size. So if you were a family size of 4, they took a different amount of income out before they did the calculation. And then they did, 10 or 15% of income, depending on which plan you chose. So it's going to result in a higher payment for a lot of people. And I think it's going to be unaffordable. The other big thing about the WRAP plan is that it's a 30-year plan. So after 30 years, whatever is left over is forgiven. Whereas most of the plans that we've known about, up to this point have been either 20 or 25 years. So we've just added at least 5 more years on for most people.
In,
And
in terms of
for a lot
extra
of other
interest you're
people,
paying
10
too.
years. Mm-hmm.
Oh man. So
Exactly.
with these changes, and if you don't want to answer any of these questions, you can just tell me to move on. But um, like, what are you kind of recommending now for students? Because now neither of those federal options sound excellent. I used to feel like, hey, you're going to be on the save or repay program maybe that first year as you're kind of getting your feet wet. You have no income, so the previous year, there's nothing to go off of, and you can get like an emergency fund kind of piled up. But what are you guys typically recommending? Are you recommending refinancing really early or just going straight private from the get-go? What do you guys, I know every student's different, but what are
Mm-hmm.
you typically seeing that way?
What you said, it's just a month old. We're all new to this situation, but what I've been saying is to start thinking outside the box. If you want to enroll in school and it's going to be fall of next year or beyond, you said you've always wanted to go to dental school. You've been listening to this podcast for a while. You need to start thinking outside the box about what you can do to be able to pay for it. Because as we said, like if prices don't go down magically overnight,
Mhm.
which we know is not going to happen, you're stuck with this bill wanting to go and pursue the same education that somebody was able to do with loans a year before that. And now you're kind of capped off at these numbers. And so when I say think outside the box, scholarships, which you're like, oh, that's not really outside the box. But a lot of people are just like, I know that there's money available to be borrowed. I'm going to borrow it. I'm going to get in the system and I'm going to pay it back over a period of time because that's what, my friend did and that's what my cousin did or that's what my dad did. Now, scholarships are going to be more important than ever. So start thinking about what ways are you unique. I was talking to someone the other day and I'm like, there's a scholarship for everything, for being left-handed, for being, female, for being, from XYZ country, for having a descendant from, X place, from marrying somebody from another country. You name it, there is a scholarship for it. So don't just think about like, I really want to go to dental school. Let me find the dental scholarship. Like, think about where else. Like, is it your church program? Is it a soccer team, recreational league that you're in? Um, think outside of the box as it relates to where you can find additional funding, so that you're not having to take out private debt above and beyond those federal limits. So that would be kind of like a step number one. Of course, grants is another piece of the puzzle. Um, you know, thinking about that, and then also like starting to work now. We're going back to kind of an old school, method where if you're getting ready to go to school, maybe you take a year or two, finish undergrad, and before you go off to dental school, you just work and you save up so that you have some money so that you're not taking on a bunch of private debt that you don't know how you're going to pay back when you get done, or you don't have those same interest rates. So yeah, that's not probably the ideal thing for a lot of people. Is like, oh, I have to forego my dream for 1 or 2 years. But the better financial health that you can be in as you head into the opportunity where you're going to head into school, you're going to be full time, and you're going to have to finance it. The better prepared you are, the better you will come out on the other end.
So you said something interesting. I liked how you said scholarships, like not even necessarily focusing on dental scholarships is a big thing. I think sometimes we see a lot of our students get pigeonholed of like, oh, I've got to get that ADA scholarship or whatnot, and those are super high demand. And they're too competitive in my opinion. But in terms of grants, I haven't seen a whole lot of students go after grants. Have you seen success with dental students getting grants?
Like I said, it's a newfound kind of area because they haven't really ever wanted to try to go after them, but I
Yeah.
think that it's possible. Like I said, look at what state you live in, what state you'll be going to school in, because there are grants available.
Hmm.
So once again, it's similar to the scholarship world. Like people don't realize that your particular state, if you go off, they might subsidize your education if you decide to come back to your state and work there, and even for your city. So sometimes people are trying to keep their crop local, and so it's like if you go off and get your education, we'll put 10,000 toward it, and as long as you come back and work here for 3 years at least, that 10K goes away, and it's a grant, not a not a loan. So there's things like that where it's like kind of grant-esque that could turn into a loan. But those are the kinds of things that should be looking toward, because there are kind of grants like that.
That's great. Any other unique outside the box payment methods you've seen other students kind of employ, whether like, they're during school or before or after school, that you've seen kind of work to help lower that cost for tuition in terms of borrowing money?
Haven't seen, like I said, we haven't seen it yet.
Uh-huh.
But we're definitely, like you said, hearing from people on a regular basis, like what they're thinking about as far as like GoFundMe pages. And, I don't want anything for my birthday or for Christmas. Like, I just need money to go to dental school. So gathering the funds using the village and the community that they have available to them. And like I said, starting in advance. Start now,
Mhm.
trying to think of your plan B, your plan C, because we don't know how it's going to plan out over the next few years. We hope that, maybe they'll lift these limits, or that, like you said, the cost of education will go down. But also, like you said, take advantage of, your right to vote, your right to be heard. Reach out to your congressman and tell them how this is affecting you. So that seems like a small thing to do that may not change your, outcome in the short term. But if enough people are calling and talking to their congressperson, and letting them know that the constituents are upset about this and that this is like really affecting your life, changes can be made. I think that's the thing, is like we don't realize the power that our voice has when we all band together.
No, I agree. I think we don't take that enough we take that for granted. I think if more of us did that, I think it would make a big difference. So in terms of, there's so many mistakes that can be made, and oftentimes we're not taught this as dental students or pre-dental students, of like, what are the kind of the boogeymen around the corner that we should know with student loans. What are some of the most common mistakes that you guys typically see with student loan planning that students don't consider?
Absolutely. And I would say it's like putting off big life decisions. When I say big life decisions, buying a house.
Hmm.
Oh my goodness, I have 400 grand of loan. I'll never be able to buy a house. And they don't even look into it. Uh, what actually happens when you want to buy a house is they look at your monthly debt to income ratio.
Yeah.
And so what's going to be important if you do take on $400,000 of student loan debt as a dentist is that you have an affordable monthly payment that you can handle in light of your income. So if you can get one of these payment plans, if you can stretch your loans out over 20 years or something like that, where the payment is a little bit lower, then it makes it a lower monthly debt to income ratio and makes it more affordable for you to be able to go after a mortgage. But really, when you're thinking about getting a mortgage, what do you need to do? You need to be in good financial health. You need to have a down payment saved. You need to, get rid of your credit card debt, because that's something else that contributes to your monthly debt to income ratio. You need to have, a little emergency fund set aside to like buy furniture once you get in that house, or, fix the water boiler, whatever the thing is that, what's the water heater? That's what
Yeah.
it is. Once you're there, because now you're a homeowner. People think that like student loans are going to stop me, and they get so focused on student loans are going to stop me that they don't actually do a good job of preparing. You can buy a home even if you are a dental student with a bunch of debt.
Hmm.
So that's one big life decision that people forego. Another one is getting married. Sometimes they're like, well, I don't want my spouse to be on the hook for this debt. I don't want them to feel like I'm bogging them down. So we'll just stay, together. We'll cohabitate, or the spouse might be the person that's like, I don't want to marry
I
this
don't want
person
to have,
because I don't want to be stuck with the
yeah,
debt.
all that baggage of money.
Yeah, so with the federal student loan system, the debt passes away with you. It does not pass on to your partner. There's no way to make even if it's a nasty divorce or something like that, there's not a way really to make the debt that is yours become the other person. So you don't have to worry about, oh, I can't marry this person. I don't want to be with this person because I'm also going to be trapped with their debt. The one big thing that does matter is whether you do marry filing jointly or marry filing separately. And that is going to be in play for borrowers going forward. So with this wrap plan, that's going to be pretty much your only option. If you're a borrower after July of 2026, they are allowing married filing separately. And why married filing separately is important is because if you file jointly, they will take into account your household income, and which will give you a much higher student loan payment.
Gotcha.
So it behooves you to do married filing separately so that your spouse's income, assuming they don't have student loans, is not considered when they calculate your student loan payment, and it can be lower and hopefully more affordable.
So with those like wrap program and then the new, they're lengthening that standard repayment from 10 to 20 years and the wrap's going to 30 years. Are you guys advising students to obviously pay that off quicker? Or are you saying like, hey, stretch this? I know it's really case dependent, especially on how much loans you have and like your projected income, but what's kind of a typical thing that, your average person, you're kind of saying, hey, I would recommend doing this?
Yeah, it depends on, they said, one particular situation, but also how much you plan to borrow. So the other thing that people are doing is thinking of, more inexpensive dental schools. So the cheaper schools, I think, are going to win out in the short term.
Yeah, they will.
Because it's just like, I just can't afford to go to the $400,000 school. But yeah, when you think about like what's going to happen and how am I going to be able to pay this back versus, the standard versus the wrap plan, it's like, I have to figure out like what I'm going to be able to afford on a monthly basis. And so I think that's also going to cause people to start asking for a larger income at like right out of the gate. So they graduate, you're an associate, and they're like, I can't come to work for you for $120,000. Like, I need $250 as an associate. And so people are going to have to start figuring that out as well. Business owners, which, most dentists are, private practices, small firms that bring on one or two associates. It's hard to have like 401k contributions and things like that. But and it's really important for people, like I said, to lower their adjusted gross income. So I think thinking about the benefits that are available to them are also going to become really important going forward.
Yeah, I think that's going to be a huge contributing factor. It's just interesting to see one bill and the trickle effect it's going to have over the long haul. Another question I had for you was something you said, how a lot of people are worried about that, the loans being passed on, and federally they're not passed on if I die or something like that. Privately, are they passed on? If you
They're not passed on, but they will diminish your estate. So let me give you an example. Let's say you take on $200,000 of private student loan debt, and then you pass away, you're married. They're going to try to collect that $200,000 from your estate.
Okay.
And that means like, they sell your car and it was worth 20 grand. The cash from that goes to your debtors. I don't know, you had a bank account and it only had your name on it, not you and your spouse's name on it. They'll try to, use that. They're going to clear out your debts as they clear out your estate, which means less is left over for your partner. So what most people do when they have private student loan debt is they get a term life insurance policy. Yes, and I want to be very specific, term life insurance policy, because yes, dentists are definitely preyed upon, and yes, try to avoid whole life like the plague. Get a term policy that will cover this in the event that you die, so that it doesn't diminish your estate, and that whatever you were going to pass on to your significant other or your children, is still intact.
Okay. And in terms of refinancing, when does it make sense for a student to refinance? Because I'd say majority of our students have federal student loans, or that's the route they're thinking they're going to go. And that may change here once again with the new change. But when should a student start looking at refinancing, and when should they not?
I would say when you hit a 1-to-1 debt to income ratio. So you earned $400,000 and you borrowed $400,000 as an example. Generally, you earn $200K of income and you're still at $400,000 of student loan debt. You literally owe double what you earn. And that's going to point you to the forgiveness routes or the income driven routes being more affordable for you on a monthly basis and probably over the long term. But at the point at which, so here's another thing, like I said, I run into with dentists. You were asking me about like mistakes that are made. They get out of school and they want to refinance immediately because they're sure they're going to be rich. And you guys do, you earn well. But it usually takes a while. And if you're buying a practice, that's another debt that you take on, and you have to kind of get that part figured out. And with business expenses, your income sometimes is not as high as you think it is. Like the business might be bringing in 350, but on paper you might be bringing home 150 for a while
Mhm.
until you get everything figured out. And so, what I see dentists do is, like I said, I'm gonna do well. I don't want this really high federal interest rate, and they refinance their loans immediately, and then they feel strapped for cash on a monthly basis because they've refinanced too soon, and their payment is what it is. They maybe can't even refinance again. Sometimes you can refinance, like let's say you did 10 years the first time you refinance, maybe you refinance for 15 years the next time to get your payment a little bit lower, but then that interest rate goes up. So you kind of still shot yourself in the foot in that regard. So not being 100% sure that it's time to refinancing and jumping off that ledge too soon can be really painful for someone who's not like financially organized, doesn't understand like their expenses, wants to buy a home, doesn't know how expensive kids are, goes out there and has one and adds that to the mix. So you want to have a really good financial plan before you refinance your loans. And like I said, once you hit that 1-to-1 debt to income ratio, even if you're close, you're like, oh, 350 and I make 400. Like I wouldn't jump off that ledge until you feel really, really secure that your job is going to be stable and that your income is going to be stable around that same amount.
So does that change, like, let's say someone's a practice owner, buys a practice, and now that, I mean, you've ballooned your debt because you just took on an extra debt. Does that change your, like, when you would refinance with the student loans, or is it just like, this is just take home pay, just base it off of take home pay, not including other debts?
It depends, of course.
Yeah.
Always it depends, but generally, you probably wait until after you paid off the practice loan.
Mm,
You usually get pretty aggressive about trying to get that off your plate quickly as possible because once the practice loan is gone, what happens? Your income goes up
yeah.
drastically. You're putting $10,000 a month or some number toward the practice loan, and now you no longer have to do that. There's $120,000 of in my example of additional revenue that year, and now your income can go up, and now you feel more comfortable because you get to take home more of that, and you can put that towards your student loan. So you would probably wait to refinance until after you paid off a practice loan as one option.
Hmm. So there's a lot of different repayment strategies that you hear about of, just get on a plan, pay the minimum, refinance is another strategy. Some people kind of take a Dave Ramsey approach where you do like a snowball effect where you pay the lowest one first, or you just pay the highest interest rate one first. Is there a certain avenue that you guys typically trend towards that you see better success with in terms of that, what debt approach you guys take?
Yeah, so this is a really good question because a lot of people try to straddle the fence. And, the short story is, like I said, if we're going federal, it's probably because we're going for forgiveness. And if we're going for forgiveness, we need to pay as little as humanly possible toward these loans, which is counterintuitive for people because you're like, it's a debt. It has a bad interest rate. You just told me, Lauren. I don't want to, watch my loan balance go up, or I want to try to pay it down. If you want to pay it out, pay it down, or pay it off, you want to be in the private system. So you're either on the federal, I'm going to get forgiveness side of things, or you're either on the boat of, I'm going to pay this off in full and I want to save as much as interest on possible. Straddling the fence is like, I'm on the federal system. They've given me a $1,200 a month payment, but I can pay $1,300. When really your interest that's accruing is like $1,700 on a monthly
Yeah.
basis. You're not making a dent by paying an extra $100 toward your loans.
Mm.
And that's why we value our work at Student Loan Planner. And that's where the consultation becomes very valuable, is some people can't do that math to understand. They're just like, well, my payment's $1,200. I'm paying $1,300. I'm doing a good job. And it's like, no, you're actually throwing money in the trash because you don't understand that your interest is $1,700 on a monthly basis. And so you need to be taking the forgiveness route. On the flip side of that, you have a $1,200 payment every month for the next 10 years, and you can easily afford to pay the $1,200 every month for the next 10 years in the private system. You can even afford to pay an extra $800 a month. Now you're paying $2,000 a month and you'll be done with it in less than 10 years. Like, that's paying it off aggressively. Like, you either want to be on one side of the fence. I am not paying one penny extra than what they asked me to in the federal system, or I am going to attack these loans and I'm going to get them off my plate as quickly as possible. Do not do some combination of the two, because that is not efficient from a cost perspective. And so that's one thing that people have to be mindful of as they think about, like, how am I going to pay my loans back? And, like I said, you want to be responsible, but being responsible means understanding what is right based on your particular situation.
Mm-hmm. That makes sense. So in just your perspective, since those are the two camps, because I see this all the time too, of people do straddle that line. Heck, I've even done it before. It's like, oh yeah, I got out of school, I need to pay some loans off. You know what I mean? I'm going to pay a little extra. Doesn't make a whole lot of sense. So once again, I know this is really new and it really depends. Your average dental student coming out with 400 to 450,000 in debt, like dollar wise, it probably makes a little more sense to just go private and pay it off if you're looking to save money over the long haul, correct? Or is it,
Yeah.
hey, let's just, kick the can down the road and get forgiven?
It always, I know I keep saying it depends.
It totally does. I know it does. But yeah, I want to hear your opinion though. Sorry for interrupting.
You just got to think about, like you said, there's things that I can't tell about my personal future, but there's things that I feel like are going to happen for me. If you feel like very confidently you are going to out earn these student loans and you can pay them out, like, interest rates are great. So, like, what we saw during COVID as an example was the interest rates dropped down to 2%. It was a great time to refinance. It was, we knew that 2% interest rates were going to hang around forever. And a lot of people don't regret that. But we also saw people, like, refinance at 2% variable interest rates, and 2% variable. Now they're paying 7% on their student loan. So it's a mistake that was made.
Mm-hmm.
So you need to, like, decide, I'm over here and I can afford to do this. I've got this on lock. I feel very stable. Or, nope, I need to take the forgiveness route. I'm going to do everything I can to keep my income low, which is another thing that you can do as a dentist, is kind of manipulate your income if you're a practice owner. So as I mentioned, the adjusted gross income is the number that is used to calculate your payment. You have business expenses as a business owner. You have 401k, other pre-tax deductions. A HSA is another thing that you can use. If you want to get in the camp of I'm going for forgiveness, then you want to do every single thing that you can to lower your adjusted gross income.
That's some good advice right there. I think, yeah, pick a camp and then get in that camp unless the interest rates drop to like 2% or something like that. You know what I mean?
Exactly. And it also speaks to staying abreast of what's going on in the financial world.
Mm-hmm.
Sometimes it's like, I just wanted to be a dentist. I wanted to do this one thing really well. Unfortunately, you don't have the privilege of, like, sticking your head in the sand and not worrying about any other aspects of what's going on in the economy because you have a $400,000 student loan. So you kind of got to have somebody in your corner to help you out with that. You don't have to be an expert at it, but you have to pay attention and make sure you're doing the right thing for yourself. And then sometimes people hire, like, a financial planner or wealth management company, things like that. And they at least, kind of keep you, will remind you annually, hey, what are we doing with these student loans? Or, hey, this is going on in the economy and this might be a good time to refinance. But I think, the same way we go to a dentist, a professional, about our teeth, you might want to make sure you put into your budget having the dollars to be able to pay a professional on a regular basis to check in to make sure that you're optimizing, because making mistakes, some of the ones that we've talked about today, can cost you tens of thousands and if not hundreds of thousands of dollars. I did a consultation the other day with a gentleman, and he had $347,000 of student loan debt. And he came to me because he was thinking about paying it all off. He had just sold his home, made a lot of money on his home, and was like, I'm just going to write a check for this and be done. Just wanted to check in with you, to see what the best way to do it was. It was kind of more what he was thinking. And as we got to talking, this guy had been working at a public service loan forgiveness eligible employer for 23 years.
His loans could have been 2 more years and he would have had it forgiven, right?
Public service loan forgiveness is only 10 years.
Oh my heavens.
He was he could have been not paying on these loans. So we talked about it. I was like, are you sure this is where you work? This is what you did? And I'm like, sir, you just need to fill out some paperwork and your loans are going to be forgiven. $347,000 of debt. Yes. And he almost wrote a check for it using his all of
Wow, that
the
consultation
income, the
money he
revenue from
spent
his
on you
home.
guys was well worth it.
And that was my point, is that sometimes asking a professional just for your peace of mind, maybe you do. You're reading the blogs, you're listening to the podcast, you're doing all the things, and you're kind of on the right track. Sometimes just checking in with someone who does this all day, every day is worthwhile, just to make sure you don't do something that could cost you a boatload of money in his case.
Oh, wow, I can't even imagine if
Yeah.
that's a huge
I'm
mistake
like,
that he just avoided.
yeah, I'm like, now you can go like retire a couple years earlier, because
Yeah.
he wasn't in the like best overall financial health. And he was just like, well, I feel like the next thing to do is pay off this debt now that I have the money from the house. And I'm like, no, sir, go put that in a brokerage account
Go
and
have
get
fun.
yourself on track. Yeah, like,
So, one question then I kinda wanna ask a little bit more about your guys' consulting services here. With deferral years, I've gotten this question a couple times with, like, residency programs, how, like, "Hey, your loans are deferred, you don't owe anything during a residency program," or whatnot. Does that count if you're in the federal camp of things of, like, I'm going for forgiveness, does that count towards your years, or does it not?
it does not count toward your
Okay.
years. So in school deferment, residency deferment, which is what you guys end up in a lot, does not count toward your 20 or 25 years. The thing that people don't know, this is great. I'm glad you brought this up, because it's another common mistake
Mhm.
is you're like, I'm a broke resident. I qualify for this deferment. I'm just going to use it and worry about it later. You want to get on the income driven plan, because if your income is low, your payment will be
Yeah.
low. If you're a broke resident, your payment, well, like I said, going forward, on the wrap plan, it would be as low as $10. But if you end up on IBR, or you're on one of the other payment plans still for a little bit, your payment could be as low as $0. So if you're not earning enough, the payment will be zero, but you're on a payment plan paying zero, versus being in deferment and paying zero. People don't realize that there is a difference between the two. You're like, not paying is not paying. And it's like, no, not paying when you're on an income driven plan is helping you get your 20 or 25 or 30 years, depending on what we're talking about, getting closer to that date. Whereas deferment or forbearance is just hitting the pause button and doing nothing. So you definitely don't want to sit in deferment. You'd love to get on an income driven plan. Which, to that point, one other thing that people do, and we kind of like scratch the surface of talking about public service loan forgiveness, it's not very popular for dentists, so we don't have to spend a lot of time on it. But like I said, as you're thinking about ways to get this debt off your plate going forward, like I said, we were talking about being creative earlier. Public service loan forgiveness is still alive and very
Yeah.
well. It requires that you have direct loans, which all of you will, because you're borrowing after 2010, that you're working at any 501c3 or any nonprofit organization, that you make 120 qualifying payments, which is the equivalent of 10 years, so much shorter than any of the plans we talked about today. Aside from the just like standard repayment plan. And then I'm missing one. Oh, that you're on an income-driven repayment plan. So, like I said, going forward, that wrap plan, while it's not, the best thing on the planet, it does still qualify for PSLF. And then, like I said, if you're a current student, you'll still be eligible for IBR. You could choose that. But PSLF is gangbusters. A great way to be able to pay off your debt. 10 years. There's no tax liability afterward. It's a much more affordable way to go about it. But what does that land you as a dentist? And like a free clinic, the VA, like I said, it's just not as many options, but you definitely can look for that. So that's another way to probably try to control debt going forward.
No, I think that's a often overlooked avenue to take. But it's got great, yeah, it's got great options. Now, here's a question with that. Let's say someone's like, I just kind of want to hustle, and then I'll put my time in at the free clinic or the VA, but I want to have work weekends at a private clinic. Does that still count as public service loan forgiveness, or does it not?
Yes. So you only need to work 30 hours per week at a qualifying job. So any nonprofit, any government agency, 30 hours a week. What you do with the rest of your time doesn't matter. Now, if you do private practice on the weekends, you're going to have more income. More income makes a higher payment for public service, but you also need to be able to feed your family and,
Yeah.
you might have, like you said, really low income because you chose this PSLF job, and then you supplement by kind of moonlighting on the weekends at a private practice. And it also kind of keeps your licensure, kind of up to date. I feel like a lot of people don't choose public service because they feel like, oh, I'm just doing like this same thing over at the free clinic, whereas in like private practice, you're kind of doing what's new and innovative, and it kind of keeps you like more, what's the word, up to date in the sense of being able to switch jobs or move around. I have heard some dentists kind of worry about the idea of like, maybe I won't be able to get a job after 10 years of PSLF because I haven't been, using the fanciest equipment. I've just been, kind of staying at par, if you will, because the clinic didn't have a whole lot of those options available. So
That's interesting. Well, tell us a little bit more about what if someone is listening to the podcast and they're like, man, I'm liking what I'm hearing. I'm interested in kind of learning more about what Student Loan Planners does and getting on one of those 60-minute consultations and a customized plan. How do they get a hold of you guys, and what does that custom plan entail?
absolutely. So you can find us pretty easily, studentloanplanner.com. I think there probably will also be a link in the show notes that will get you like $100 off. But what we do at Student Loan Planner is spend 60 minutes with you. So you'll send us before the consultation your TXT file. So it's a document that you get from studentaid.gov. You'll fill out a form. We'll ask you, about what your situation is. Are you married? Do you have children? What state do you live in? What are your earnings? Things like that, so that we can actually start to build the plan and understand what might be the best option for you. And then we get on the call, we walk through that TXT file, which is kind of like your credit report for student loans, to find out, like you said, what's happened in your particular situation thus far. What plans are available to you based on when you borrowed, how many payment credits do you already have, stuff like that. And then we move over to talking through a calculator. So we'll be looking at that wrap plan and how much is it going to cost you if your income is $250 versus $300, or if you have a practice loan, and then if your income jumps up another $100,000. So we can do those kind of projections and look into the future to say like, okay, this is where you'll end up on the wrap plan. This is where you end up on the income-based plan. This is what it looks like to refinance. How does this payment feel on a monthly basis? We walk through all those little pieces of the puzzle with you. I just did a consultation this morning, and the young lady had $40,000 of credit card debt. Wanted to continue to pursue public service, but her payment was going to be $1,300 a month. And her previous payment on the SAVE plan was like $400. So I was giving her just like bad news all around. She's like, I'm like, your payment's going from $400 to $1,300. And also, I know you're struggling probably to pay the credit card debt because it's like at 23% on a monthly basis. And so what we decided was to stay in the SAVE forbearance. So that's another thing that a lot of people are calling us about right now, is like, I got to get off of SAVE. What do I do next? And for some people, it's like, stay on SAVE for a moment so that you can get yourself in better financial health, so that we can make the best decision going forward, as long as you're not leaving your PSLF job. So we do more than, just look at your student loans. Like, we have financial coaching abilities. We don't provide like any investment advice or anything like that. But, all of us are financial professionals with some background in being able to say like, hey, I know you're here for a student loan consultation, but also, your house is on fire in the form of, like I said, for this person, it was like $40,000 of credit card debt that was draining them. So I gave her some resources so that she can go off and consolidate them without being like scammed by one of these weird companies. And then she knows what her student loan plan is when it's time to circle back to that, when she can do both things at the same time.
That's wonderful. One final thing, any piece of advice for anyone that's kind of just final parting words that you would like to part with everyone with?
A++ job, because you're listening to this podcast. You've already started to be proactive, but be even more proactive. We talked about different ways to fund your education. We talked about what these payment plans will look like in the future. Do additional research for yourself to figure out what is going to be right for you. Don't wait to the last minute. Don't wait for the school to send you something and to sign a paper, and, think about like how this is going to affect your future and what you can do on the front end to make sure that you don't end up in a situation where you're like, man, I didn't know. I just signed on the dotted line. I just did whatever I needed to go to dental school, and now I don't have a meaningful way to be able to pay this back, or I'm in a much tougher financial situation because of what I didn't know on the front end. We've got blogs, we've got a YouTube channel, we've got a podcast. So if you want to learn more just on your own, absolutely, by all means. You're not ready for a consultation just yet. That doesn't mean you can't start educating yourself today, using the free resources available to you to make sure that you have your custom plan, not your friend's plan, because what is good for your friend may not be the best thing for you.
Yeah. Well, I love that. Lauren, this has been a pleasure. I've really enjoyed talking to you. Thank you for coming on the show. I've enjoyed getting to know you guys and getting to understand your background as a student loan planner and what you guys do over there. So thank you for coming on the show.
Absolutely. Thanks for having me today, Tanner.
Okay. Well, that is it for today's episode of the Dental School Guide podcast. We hope you've enjoyed it, and we will catch you next time. That's all for today's episode of the Dental School Guide podcast. We hope you've gained valuable insights and inspiration to fuel your journey into dentistry. Don't forget to subscribe to our podcast for more expert advice, inside tips, and engaging discussions. If you enjoyed today's episode, please leave us a review. It would mean the world to us. Until next time, keep smiling, keep striving, and remember, your dental dreams are closer than you think. Thanks for tuning in to the Dental School Guide podcast.